The market was down today, but largely due to the movement we saw in Dangote Cement. That stock was listed last week, and today we saw finally a movement on the stock. It was down 5%, and because of its weighting on the index, it really dragged down the broader market index. Join me in the studio to take a look at the market performance which we've seen this week, and of course the flurry of bank earning releases is David Alao, who is an analyst with Stanbic IBTC.
Hi, Wole.
It's great to have you. Thank you so much for coming on. Right, let's start with the market movement. Today was down 1.2, but really because of Dangote Cement.
Yeah.
And when you look through the last 1 week, it's really a story of sideways trading, isn't it?
Yes, well, Dangote Cement has traded flat for the past week, but today obviously it moved and it dragged down the index with it. Mm-hmm. You know, even though we saw some of the tier 2 and the banks going through recapitalization appreciating, obviously they could not outweigh the impact of Dangote on the index. So obviously the result we saw today.
Now, I know you haven't been big on the rescued banks, but I don't know if your view is changing now that we're seeing obviously more talk about AMCON coming on board. We're still waiting for news from Abuja if the Senate did confirm the board of AMCON. We're still waiting for that, but there's a general positive sentiment that AMCON is coming on stream. Even from the CEO interviews which we've had this week, there's a sense that it's just a matter of time for this
Absolutely,
to happen.
yeah.
What are you changing your rating of the rescued banks in any way right at this stage?
For us as a company, we would buy value plays. We don't look at speculative plays. So right now we are still not buying those rescued banks. However, we do see a lot of movement in the share price, and it's exciting, you know, to want to take a punt. But we do believe that we should stick to value and provide that value for our investors.
But what will attract you to the rescued banks? What changes do you want to see before you start investing in those banks?
It would be great to see the negative shareholders funds be officially taken positive. It would be also interesting to see M&A activity. You know, it would be interesting to see someone declare that, hey, look, we're buying this bank and we see value, you know.
So it's not enough to hear that there's interest. You really have to see it happen.
Not because we don't believe that there is interest. We know that there is interest. However, the issue has been, you know, the suitors are saying that, look, they cannot throw good money after bad. So we want to see the negative shareholders funds reinstated first.
Right. Now let's take a look at the bank earnings we've seen so far. Yeah. Obviously, we've seen some numbers from the rescued banks, and we continue to see that. I think perhaps those have excited more than others because for likes of Oceanic reported well over 13 billion profits. In Afribank, we saw 20 billion, as much as 20 billion in recoveries, adding to gross earnings. But generally speaking, I think there is a view that gross earnings is still under pressure sector-wide.
Absolutely.
Profit numbers are really still boosted by recoveries. What are your thoughts in general about the numbers we've seen?
The top line, like you said, gross earnings have been disappointing. All the banks, you know, have failed to grow top line. At best, you have a UBA who fell short by about 7%, and you have other banks who fall short by about 20 to 23%. You know, so you know you've got a broad spectrum there. However, we do think that you know, if you are solely depending on recoveries and write backs for your bottom line growth, then it's not sustainable. You know, we would like to see loan creation. We would like to see asset creation, you know, as it were. That's what we really are waiting for.
But I mean, if you have that view, how are you looking into 2011? Because I do know that from Stanbic IBTC we've heard that there is value in the banks,
absolutely,
in the sector as a whole. So if you are still looking to see that top line growth, why would you be buying the banking sector now?
At the moment, it's a value play. You know, you have some of these banks that are trading at half times book. You know, we believe
that's a no-brainer, really.
Exactly, that's a no-brainer. So we would buy those. You know, however, there comes a time where, say, price to book has gone up maybe to 1 times or 1.5 times, then you begin to look for growth to push up your valuation. And where you don't see growth in the top line, you know, you don't see maybe significant reduction in costs, then you begin to wonder that where is the result going to come from? You know, because at some point, then recoveries and write-backs should taper off.
But in a few words, are you optimistic about 2011 for the sector?
Yes, I am. I am optimistic. I would like to think that activity will kick in sometime after the elections.